Even in an AI-focused world, MacroEdge is in the business of focusing on you. We don't just understand our clients, we listen to what's said and illuminate on what's not. In a world moving at the speed of light, with shifting markets, evolving workforces, and non-stop disruption, MacroEdge helps you to navigate and identify novel opportunities, expand your enterprise, and succeed in tomorrow's world. And it all starts with you. Put your enterprise and your perspective in the driver's seat. We're in the business of you.
Good evening, everyone, and welcome to MacroEdge Radio. This is John Galt speaking. We have an extremely special guest tonight, only because we know that people view controversy as the way to get a message across. The truth is, when one speaks facts, when one discusses history, and when someone makes commentary on social media, their blog, their Substack, or whatever, we understand just how visceral some of the reactions are from the proverbial mainstream Wall Street financial media types, because you don't have permission outside of their reality to speak, comment, or analyze anything they say or do. Because if you ask questions, you get answers they don't wish to provide. Well, Just Dario is one of the more vocal speakers on social media. And if you read his blog, I might add, very intelligent on how he outlines what's been going on. And a lot of the things you don't see in the dark rooms or corners where the rats and cockroaches, as Jamie Dimon spoke about, scurry about, he covers. Before we get into that, I'm going to make this the shortest market review in MacroEdge history. The bond market didn't believe the CPI, nor did Dr. Copper. Everything else, take it at face value. The promotions are over. The bull of bull is ongoing. And as I've been telling my listeners and my readers, next week's the key week when the Fed meets and China talks to Trump, allegedly, even though officially there has been no announcement from Beijing. Without further ado, though, I would like to introduce Just Dario. Dario, welcome to MacroEdge Radio.
Thanks a lot, and good evening, everyone. Really happy to be here and really excited.
That will let what happened in the past happen again. Yet everything we see says, yes, it can happen again, or it can be a lot worse. Let's start with your subject and my favorite, because you and I have talked about this online before. The Bank of Japan. The Bank of Japan and Takaichi thinks that the solution to their problems. I think the new prime minister is short-term and going to inherit a firestorm. Is she the Band-Aid, or are we about to witness more Bank of Japan intervention to try and prevent the carry trade unwind?
Well, this is a very good question. Thanks a lot. So, what's happening in Japan is imagine like trying to be at the helm of a very big cruise ship in an ocean that is completely into storm. So the stronger the winds, the worse the storm, the harder it is to steer the ship towards the direction that you wish to travel towards. So this is exactly what's happening in Japan right now. So the economy, the level of debt to GDP, the level of liquidity that has been printed, not in the past 5 years, not in the past 10 years, but for decades, got to a point that the system itself almost became like an independent organism, so to speak. Okay. So, and the way that you can see it's a spiral. Okay. So the new prime minister comes and she says, I'm gonna deal with inflation printing more money. Okay. Because that's the only thing that Japanese politicians knew how to deal with problems for many decades. Okay. The problem is that now that organism, it's more and more starting to become independent. What does it mean? Is that while before you could get away with the consequences of injecting so much liquidity without real economic substance into the open market, now you are starting to have a reaction you don't want to see. The reaction that they don't want to see is a depreciation of the JPY. A depreciation that actually I posted yesterday. It's we are only $7 away from 160 compared to the US dollar. Why is that specific FX rate very important? It's very important because trillions of leverage through the JPY carry trade is directly or indirectly tied to that number. A lot of the amounts, of course, are tied to the level of interest rates, but the FX rate is the one that is more critical in the very short term. And we saw what happened last year when the FX rate was about to go out of control. Then Japan intervened, selling reserves in the open market in order to, as they said, as they claim at that time, combat like the speculators. In reality, isn't really like problem of the speculators. If anyone really keeping the market off balance is them with their action. So what they did, they intervened. They created a cascade of margin call like throughout all the JPY carry trade system. Okay, so those people were not people betting to on the devaluation of the yen. Those were people like using leverage in other markets. And on the 5th of August, we had the flash crash in Japan, and the VIX pre-market in the US spiked above 60, and only the rumor of emergency intervention of the Federal Reserve that was completely, baseless, but that was enough to calm people down. So we are heading towards a very similar situation right now. I mean, I'm not sure like what the Western media in particular do not understand, but if you read all the policies that she promised to announce during her campaign, there is no alternative that the markets are gonna like put back in that situation. And once we're back in that situation, then I believe the government will try to react in the same way, intervening in the market, try to get the support, especially of the US Treasury, but also of other central banks. Because what is going to matter the most is for things to bend is okay, but not to bend too much to break to the points that they are beyond repair. Because if that happens, then, what we saw in the UK system a few years ago with Liz Truss is gonna happen in Japan simply with a 10 times greater magnitude.
In your opinion, and I look at what's happening now, and there's some recognition of a repricing of risk, especially since the February attempted unwind. Most people overinterpreted what occurred earlier this year. I'm looking at what's happening now and these nightly interventions that you and I have been documenting for many, many months now, where they're selling short-term US treasuries to raise dollars to cover liabilities for the banks and the insurance companies, seems to be nothing more than a band-aid. And I don't think the Bank of Japan can maintain that policy forever without putting their own economy at risk and without an accident crashing some aspect of their system. What's your take on these nightly interventions? Is that a dangerous game that eventually will blow up in their face?
So this is another very good question, and my answer here is that we live the economic system and financial system. It's when you put pressure on you trying to intervene on one side, something is reacting and balancing on another side of the economy. The fact that people don't see where this consequence happens or these consequences are not reported, it doesn't mean it's not happening. Okay, so all this intervention, all this constant money printing, that, by the way, the one that I keep reporting daily are the special market operation from the POJ that are expressively central bank tools that they enact upon request from financial institutions in struggle. Like, these are the rules. I'm not talking about like the regular intervention that they keep doing. Effectively, like, they're still like doing QE and other stuff. So where is the the release valve of all of this? The release valve of all of this, and similar, it has been happening in the US, similar that's been happening in Europe, is in the real economy, with a level of inflation in the real world that whoever you talk to, whatever type of index that is non-public, that is trying to read the gauge of what's happening on the ground in Japan, in Europe, and the US, all of them tell the same story. Like, inflation never came down, always remains through the roof. It's simply not reported. Okay. So where is the breaking point of this? The breaking point of this is effectively when the real economy cannot withstand the pressure anymore. And in Japan, we saw this kind of like situation significantly with with the businesses that mostly export to the US, and they have been significantly impacted by all that's happening. Okay, so on the other side, there are people, like, Japan is going through like a significant socioeconomic like crisis right now, and they're also like going through population decline crisis as well, with you know the real estate market that basically it's a zombie market, savings that are concentrated in people that are older and older and heading towards retirement, and those kind of people are not people living the savings to the system. They're the people that needs the saving in order to go on, and all this kind of matters. So to conclude here is like, things are gonna break when the release valve is not gonna be large enough in order to avoid an explosion. Now the release valve, especially for Japan, worked, but also the reason why this new prime minister has been elected is because there is a growing discontent among the population, and now she has been brought in order to deal with all these problems forcefully. But then she's going to deal with problems, amplifying even more the existing problems if she stays in the current course. So ultimately, another release valve needs to be opened somewhere else, or this whole system that it's contained and you have more and more liquidity like pumping in and placed in more and more like leverage trades, carry trades, financing, and whatever, is ultimately gonna blow up.
Do you feel as I that the Japanese Bank of Japan has to coordinate almost exclusively with the Federal Reserve to keep the JGBs from blowing out on the long end? Right now, their bond market looks extremely unhealthy, and even with her election, you're still looking at a risk of Japanese 10, 20, and 40-year bonds blowing out to new record highs, something I think is great for the savers in Japan. However, for any hope of stimulating economic growth or the inflation they need, it would be a disaster for the new prime minister. Agreed?
Yeah, I totally agree. So, um, first of all, the Bank of Japan, so yeah, they definitely coordinate with the Federal Reserve and with the U.S. Treasury, but also they also coordinate with other central banks for sure. I mean, all these people like talk to each other. And one thing that I highlighted like 1 year ago, and I still see many people not connected the dots, but one peculiar thing happened when there was the crisis of the 5th of August. Like at that point in time, a lot of banks and financial institutions started to borrow liquidity aggressively from the Bank of England short-term open market repo facility that I just checked and is above like 85 billion pound right now. So this is another proof that effectively when there is a shortage or significant stress in the financial system, the financial institutions, they go and try to fetch the liquidity they need in order to plug the hole somewhere else. And these central banks make them available effectively. In the case of the Japanese bond market, so the Japanese bond market is, in particular on the longer end, is completely non-existent. I mean, in the moment there are real trades, you see immediately because the yields start jumping around in a way that is completely unhealthy. And what the Bank of Japan has been doing is similar to what the US Treasury has been doing in the US. They are running this, you know, government bonds. They call it buyback program, but it's not a buyback. It's not that the government has a surplus and they can repurchase their debt from the market. What they're doing is that they are front loading all the debt in the short-term part of the curve and use this additional debt in order to put a cap on the yields of their government bonds, right? And people, the thing that it really, I find it so hilarious is like the Japan total debt keeps growing now to levels that, you know, are basically like hard to track. The US government debt keeps growing, and then you see the yields in the market going into the opposite direction, right? And people come up with all sort of narratives, right? While the truth is that those yields have been and are and will continue to be incredibly manipulated because those yields, they impact the mark to market of the assets in financial institutions' balance sheets. That is the real problem. And the other problem is that another thing that people don't realize is that when you are in a high inflation environment, when you have government chronic deficits, they can only be make sustainable with central banks' money, monetization of debt. Ultimately, increasing interest rates, okay, effectively create nasty feedback loop of which the government needs to pay more interest. These interest go on top of the debt. This debt is charged interest, and ultimately you have a runaway spiral where all things break. So now Japan and US are really forcing the market to a level that it doesn't make sense. So where is the release valve again for this? The release valve so far has inflation in the economy, and another release valve has been, you know, liquidity flowing into the stock market, with, you know, the Bank of Japan like this week coming out and say, oh, you know, we are a bit concerned that the stock market is overeating. So I mean, like these things is a is a whole patchwork. It's not a really monetary policy. It's like, you know, just wake up in the morning and see what's happening, and then you act in order to keep things together. You see where the system is bleeding, and then you go there and you try to plug the hole. This is effectively like what's happening. And all these people, the reason why they need to be so coordinated is because, like, the financial system is global. So what happens in Japan has consequences in US, in UK, and whatever, because all the global financial institutions have been, like, you know, sloshing around liquidity printed by all the central banks through the year, and moving that from one place to another place of the global financial system in order to maximize their revenues. Problem is that now they have to deal with an issue that not many people are still addressing properly, is that the assets that all this leverage has been invested are becoming increasingly illiquid, and their value, because of the current level of interest rates, is deeply underwater.
Well, I thought this brings us to some interesting points because, as you said, there's a lot of instability in the Japanese financial system, especially because of the nature of the interventions. With the carry trade still estimated around 14 trillion, a reduction from last year when they first tried to increase rates, does not the risk of the U.S. yield curve narrowing closer to current Japanese rates scare the living hell out of the Bank of Japan? Because there's a lot of pressure on the Fed to bring rates down closer to a 3% neutral rate. However, with the Japanese 30 years sitting at, well, 3.05%, it does present some challenges trying to maintain that carry trade and the leverage needed for that trade to succeed, sir.
Okay, so this is the answer to this question is gonna be is quite technical. So I'm trying to do I will try to do my best to answer this without, like, you know, making it too clunky. So the rates getting close to each other per se is not, is not the real problem. Okay, so how the JPY carry trades works in very basic terms. Okay, you borrow money in Japan, you go to the US, and you buy assets, fixed income assets. Okay, so paradoxically speaking, yields coming down in the US is good for the value of the assets. Okay, but that is only one effect. The other effect, the real problem here, is the debt. Okay, so on one side, the debt that all these banks needs to fund, okay, from Japan, the cost of this debt is increasing more and more. Okay, so while there is a benefit from the asset side, okay, so they might have a gain from this move in the rates. On the other side, the losses are a problem, and there is an additional problem of all of this stuff that, people, it's very hard to put it out there, is that all these institutions, they were this carry trade functions so well for many years for two reasons. Because the Japanese yields were very low, like rock bottom, but also because the JPY to USD FX rate was incredibly stable, was almost acting like a peg currency. Okay, like the burst of volatility were completely non-existent. Okay, you didn't see like one figure, two figures move like for like so long. Sometimes not even in a year these things happened. Okay, so what's the problem in the carry trade? The problem in the carry trade, the risk that people edged was the risk of JPY appreciating against the dollar. Okay, so there is an incredible structure of derivatives out there where on one side of the carry trade, so remember there are always two sides. On one side of the carry trade, they borrow money, they invested money abroad. Most of the times they didn't hedge the rates, okay? Because otherwise, like if you start hedging all the parts of your trade, basically you lose your margin or your profitability. But the things that also the people hedged were the currency risk. Why? Because if the JPY appreciated compared to the US dollar, then you have to the debt that you had to repay was in JPY. So even if you were making profit on the other side, you might even risk to quickly underwater. So this ended up being like a double-edged sword, and actually it surfaced in the balance sheet of many institutions. Paradoxically, like some Japanese institutions as well. What was the problem? The problem is that because of these edges and the currency started to go in the opposite direction, they were margin call, and they had to post more and more collateral on that front. And if you dismantle that edging, you have like a significant loss. And so if you put this together, your question was like, rates are getting closer, but there are so many components that directly and indirectly depend from that. The rates in the US coming down can be beneficial. The rates in Japan going up is surely a problem. And the Bank of Japan, I believe they already realized they are very close to a point that they cannot really, when they say we're going to raise rates again and whatever, it's nonsensical. It's not possible because they already got to a breaking point. Yep.
That's what I was curious about that because that ties in because I've identified three areas thanks to your help and reading the papers there and studying what's going on. You have SoftBank, Nomura, and the insurance companies. Which area of those financial institutions, and you don't have to name specifics if you want. Don't worry, MacroEdge has a great compliance department. We can handle anything. What would you consider? I'm sure my friends here are just going, oh, crap. But seriously, what would you consider the highest risk? Those financiers heavily invested in the U.S. market, depending on assets not deteriorating, or those who are heavily being forced to hold Japanese bonds, JGBs, by the Bank of Japan and placate the carry trade?
I mean, well, that's a very good question. To be fair, I think the only way so far that the carry trade will not create significant damages is if the volatility remains low. And eventually, the one that are, there is a pecking order in the system. Okay. So clearly in Japan, like, banks comes before insurances. Why? Because, most of the insurance business in Japan is, extremely long dated. So it's very difficult to see a liquidity crisis onto the insurance front in Japan. However, on the banking crisis, on the banking side, is a complete different. It's a complete different problem because all these banks, effectively, they were paid for many years, paid because the interest rates were negative in order to borrow money. Okay, so and upon that, they built the whole system of lending. And now, when you shift from being paid to borrow money to pay to borrow the liquidity that you need from the central bank, it sounds like a small thing, but in reality, is a huge thing, because the big problem that the Bank of Japan is also having is that the margin, the net interest margin of these lending institutions in Japan are almost becoming non-existent. And how these people have been making money? They have been making money for the most, like selling aggressive investment product to the retail audience for a fee. So the Bank of Japan cannot risk to put, all these like banking system that, let's not forget, Japanese people have 40% of their savings in cash still. It's huge. And in deposits. And those deposits are not there because they've been lent in the system, right? So effectively, like, the Bank of Japan cannot afford a systemic problem, okay, starting in that corner of the market. The problem is that eventually now the system is, too big to bail out, because people keep saying like, oh, things are too big to fail. But my answer is to them is like, I don't disagree with them, but do you realize that the system is also too big to bail out? I mean, in 2020, during the Fed alone spent $3 to $4 trillion in order to bail out the whole system, among which the banks that were most in trouble was Nomura. It was BNP Paribas and Nomura that had a significant liquidity crisis. And then it came out like a year later that the Federal Reserve took out of them like, trillion of securities in order to keep them liquid. So at some point they will have to make a choice. And in this environment that is still incredibly shaky, that we see like liquidity range or whatever, you still have people that basically keep perpetrating aggressively on this reckless investment and management pattern. The one I'm talking about, it's objectively speaking, is SoftBank. I mean, this week, SoftBank, they raised $2 billion in the bond market, paying up to, I think, like 9.75% for a series of hybrid notes in dollar and euro with a call option after 5 years. I think they were like 35-year non-call 5, and then there was like a 42-year, non-call 5, whatever. And then where are these people? Where is this money going? This money is going into the US. So, like, one thing is to do the carry trade when you borrow in JPY at 0, and then you invest in something stable on the other side of the world, right? In US Treasury. That was the most popular one, and still is. Then when yields get too low, people went into the CLOs, into the ABS market, and whatever. By the way, Japanese banks owns almost 20% of the AAA tranches of the whole CLO market in US, in case you guys didn't know. But now, right now, in order to, these people, as you can see, in order to continue like perpetrating into this carry trade, now they're borrowing at like crazy interest rates. And the problem is that the interest rates, you have to pay them, while the investments, especially like people like SoftBank, are completely liquid. Like in the past few weeks, besides OpenAI and other commitments, they announced that they are gonna buy a stake in Binance Japan. They're gonna buy a stake in ABB, actually no, they're gonna buy the whole ABB robotics division and something like that and so on. So, I mean, like, these can only be sustainable till there is incredibly abundant liquidity in the market. In the moment at which the liquidity dries out, and central banks know very well, like, this kind of structure simply implodes. And it's not only SoftBank doing whatever they do with the AI sector. It's the same applies to the real estate sector, to the commercial real estate, to buy now, pay later, and whatever. Like, who do you think are the people like buying like all these assets out there, and where ultimately the money is coming from and going? So, you know, I hope I answered the question. It was a bit difficult. I try, like, to be politically correct and to remain objective, but as you can see, the JP Carry trade, even in these circumstances and thing, I think it's a great example to show how things are becoming incredibly frothy, and eventually, like, these people, they have to continue to behave in this way in order to keep a body that is on life support alive, and the body on life support needs constant oxygen. In the moment you pull the plug, the poor guy cannot do anything itself. So this is the situation right now. So, and that summarize the the whole situation, starting from Japan to US and other markets, all interconnected to that.
Fantastic. Dario, thank you for answering that question. And real quick, I'm going to bring a quick commercial break so he can catch his breath, because he has answered the questions where I was expecting, and also so you could understand the degree of how intertwined and dangerous this merger of our financial systems is at this time, because any mistakes trigger domino effects around the world, just like we saw in the '07 crisis, just like we saw in 2000 and in prior problems. First, our guest, justdario.com, DARIO.com. If you haven't read his webpage, please do. The latest article is from Wednesday. Private credit, people can smell the smoke, but cannot spot the fire yet, unless you're a MacroEdge reader. Of course, you see the fire, you smell the smoke, and we're roasting weenies over it and probably making s'mores. Also on X, follow him at Dario, Dario CPX, at Dario CPX on X. And speaking of MacroEdge, macroedge.net/ozone, macroedge.net/ozone. That will get you a 2-week free trial. See everything we're doing with the institutional papers, real estate, everything else. And you might even read something from your snarky host who tries to sit there and introduce a historical perspective to what's going on in our markets. Dario, I'm going to bring you back up because I have Melody Wright on board, one of our frequent guests, and she's one of the best in the real estate market. But I have to ask, because you brought up Nomura, you brought up the carry trade, the intertwining of the Japanese banking system into our real estate markets. Are we not at increased risk as our real estate begins to deteriorate? And Melody, please take it away. I'm sure you're going to follow up on that.
Thanks, John. I'm very curious. I track the 10-year religiously, right? The 10-year treasury. And I'm just very curious as to what people think is happening in our markets right now, because I don't think anyone really has a pulse on it. And Just Dario, I have followed for a very long time, and I feel he's been, very prescient on many matters. And also, he follows the 10-year like I do, which is the world's borrowing rate. And I'm just curious what people are thinking about what's happening in the United States right now.
Oh, thanks a lot for the question. So, well, what people think about the United States. So, let me say one thing. So the United States market, especially in the way that it was seen from Asia, has always been considered, the prime market, the mecca, the role model, and whatever. Okay, so everyone around the world tried to, replicate what people in the US were doing, like all the financial innovations were coming, and they always wanted, piece of it. Okay? So, and especially in Asia, what was happening into the US market is incredibly attractive, and I tell you why. In Asia, people tend to save a lot of money and keep this money in insurances, okay, in annuities, or eventually they in very like low risk paying assets, okay. But a good chunk of this incredible wealth that has been built in the past years, from Japan to Taiwan, even in China, this is something that people don't realize, but Chinese people, that they love the US market. And I'm here and I can tell you that they really love that. So what the problem that they have in Asia, in this part of the world, is the lack of assets. Effectively, the lack of assets. So you had like all this money, you have like all this incredible economic growth in some countries. You have this incredible money printing in other countries like Japan, and then you don't have the assets, or in some cases, people don't want the assets. For example, a very curious thing that people don't know: right now, there are 9 million empty homes in Japan that people don't wanna do not take over even for free. Okay, but Japanese people love U.S. real estate. Why do they love U.S. real estate? Because in US, differently from other jurisdiction, effectively when you put up an assets as collateral, repossessions and foreclosure are much easier than in other countries, effectively. That gives like a level of security to all these investors. Plus, the level of financialization and liquidity of certain assets in the US market is like above and beyond anything else you can find. So effectively, like the US market has been the supply of assets for the rest of the world. And what's the best asset, the most stable asset that you can supply still, despite all that happened in 2008? People love real estate. So mortgage-backed security, commercial mortgage-backed security, and so on, they have been bought like, to a rate from all investors in the world, especially like Japan, Taiwan, and other insurances, because all these type of investments, especially in a low yield environment, you don't have defaults. So they had yield pickup, they had a great collateral, AAA rating, no defaults. I mean, bring it on. My funding cost was super low. Okay, so bring it
So,
on.
so what do you think happens when everyone realizes that was just narrative and not reality?
So the thing that scares me the most about the way that things sometimes work in the US is that people don't stop. That is a good thing in some perspective, but in another perspective, like when you run out of, you have prime borrowers, okay, they want a home and whatever, then you have subprime, and then you have undocumented people, and then you started to have like basically they run out of assets. But if they stop the machine, they stop making money, because paradoxically speaking, the money making machine in the US is not to invest in their own assets. Like
That's
most of
correct.
the
That's
most of
correct.
the US firm, they don't own the assets.
That's
Like they
correct.
take these assets, yes, and they repackage it and resell it to someone else. So they make fees, and over fees they shift the risk to someone else outside the world. So that is how people in US make money, so they cannot afford for the machine to stop. But at some point, how many houses you can sell, how many people can borrow, and how can more creative can you become or whatever.
Well,
You
I
got
think
like,
you can.
yep,
I think you and I have been on the same side of this for some time. We've met resistance with a few people. Um, but no, this can't keep going on. Uh, you actually have to have real owners. The securitization machine is a Ponzi scheme. That's all it ever was. And you have to keep paying it. If you don't keep paying into it, it's going to seize up. What's
yeah,
happening in auto right now is exactly what's about to happen in mortgage. It's just happening in auto first because suddenly everyone's looking around. We're double pledging, or blah, blah. No, this happened in mortgage like fourfold, but it's happening there first. And I think there, like, you and I, over the last couple of years, have had many similar debates with certain actors on this platform that believed in the securitization machine and we both know that it's ripe with fraud. And in fact, it's just a Ponzi scheme. So I think reality is about to happen in the world, not just in auto, but across the system. And ja говорю по-русски плохо.
actually, this is you're totally right. We've been saying like this kind of things for 4 years, and people don't understand. One funny thing, what happened like a few months ago, like Norin Chukin came out and say Norin Chukin changed the management, comes out, and now they posted a quarter with $200 million profit, after $12 trillion of losses. And then I kept saying like that profit is completely nonsense. Like the mark value of the assets in their books doesn't even reflect their own valuation, and it's there. And like a guy commented me, oh, yeah, so this guy, that cannot read, like, is making up things, like, he doesn't know stuff. And then, like a couple of months later, you have who was holding like $1.75 billion of first brands CLOs that went completely, or like not in Chukin Bank. So, and yes, like this is a significant problem because, as you said, like the auto sector. But one thing, I started to look into this stuff a long time ago, and then one thing that I realized is that some type of like deals, for example, like there were the private equity there and the asset managers that bought entire like residential areas, especially like in the southern part of the US. And they were like selling all these funds. So while at least, when you have a mortgage, you already have a person there, okay, that is paying the mortgage or whatever. So it's a certain type of dynamic. You had all these like private credit, private lending, and whatever, that they get to a point that they say, oh, listen, there is so much demand here. We are gonna like buy the houses, and then we're gonna put the people in and buy you an income, because that is the strategy. And then I take that and I will repack that with, you know, lien and lien of, they call it like art guarantees, commitments, and whatever. But the problem is that effectively they created an issue of giving a false impression of booming market in the housing sector and extremely resilient demand. But where is this demand coming from? When you peel down the data, the demand has been coming from the top 10% of the people and institutional investors, not from the people per se.
It's also worse than that. It's worse than that. It's fake demand. Like
Yeah, exactly.
they're creating a narrative, and I mean, people. It's really sad. I'm getting emailed by so many people right now that bought in, like, oh, I thought this multifamily class B, in this area, and and these doctors and lawyers and dentists, like, they're so screwed right now because they bought into all this crap, and they're actually, these investments are worth nothing. And they're asking me, like, what do we do now?
Yeah, exactly.
I don't know what to do.
This is a problem. I mean, and honestly, the Fed like cutting rates is like that's another thing. So next week the Fed is gonna cut rates, and I really do not understand what people do not get about this. If they cut rates, the prices of this, of this garbage will remain artificially inflated, but there is not going to be liquidity to move them around in the market. So
That's
eventually,
correct.
yeah, so people can borrow more money cheaply in order to pay interest to eventually the bank or the financial institution that lend them that money, kicking the can down the road,
It just
but they cannot get out of the hole. That's a
it
problem.
it never works this way. Like, this is what I want to say to everyone. Like, remember when the Fed bought MBS in 2009. Remember when rates went so low, yet prices did not like hit their bottom till 2012. Like, remember, like, this is this is not how this all works. When rates go low, things get really, really bad, you know? So people have a misunderstanding of history, nor do they understand logic, I fear. And so, no.
Yeah,
I remember in 2010 when uh, the Fed was buying MBS, rates were low, and we had a refi boom limit that, like, I didn't have to worry about bankruptcy for like 6 months. But then we ultimately filed bankruptcy. This is just another, people just don't understand the actual dynamics of this market at all, in my opinion.
yeah, and I think the fact that they don't understand is that the dynamic of the real estate and the commercial real estate market, they also have a peculiarity that doesn't really happen um, elsewhere, is that people continue to stick with an assets and pay into debt even when the asset is negative equity. Because if you move, like most of the times you cannot move the assets, okay? But then if you drop the assets, eventually is gonna hunt you around with and impair your total wealth as a whole, right? Because you're gonna be restricted in credit, you're gonna have problem and so on. So
Can someone just tell me the narrative that gets us out of this? Like, our CBDs, our central business districts, are now running around a 20 to 30%, vacancy rate. Like, how are we getting out of this? Like, it's not, guys, it's not COVID. It's never been about COVID. It's never been about people are working from home, and so now the central business districts are vacant. It's that we thought everyone was getting rich. We built high rises and all this commercial real estate, thinking that, I mean, just look at the introduction to The Big Short, that movie. Like, we built a lot of this stuff thinking we're all getting rich, we're all going crazy. But no, that's not what happened. So, what is the narrative from here? Like,
I I think the thing that doesn't really filter into the media and social media that well, but actually yesterday was a dinner with a friend of mine that is visiting here from Boston, and he was telling me and similar feedback from others, and I was there in the US myself back in March, and I saw it firsthand. It's like there is a very big misrepresentation of the state of the economy, how it is bifurcated between um, people that are effectively like getting like richer and richer because their assets value, they keep inflating a lot. But on the other side, you have a K-shaped type of situation where the middle class and other people underneath that are struggling more and more and more. And overall, okay, like, a billionaire can have like breakfast, lunch, and dinner. You know, a billionaire cannot eat like 17 meals a day to make up for the meals that other people don't eat. So the spending is getting like more and more clustered into like few people that have a lot of money, but these few people are gonna have all this like excess cash, and most of this excess cash also come in the fact that they can borrow on margin on their assets and finance their spending, so they will never like get rid of their assets that keep inflating, but these cannot support the economy as a whole. So the real economy as a whole eventually needs to slow down and digest all that excess capacity that in particular was built in the aftermath of COVID, where you effectively have not only the US government, but you also had in Europe and in other countries, in other major countries, you had a lot of helicopter money. So people had all this money. They had to gear up the supply chain because they end up like, spending all of it, putting credit card. Don't forget that there were not student loan payments for years and they've just
Right.
been resumed. So
Right.
everything is getting tighter and
Well,
tighter. And
Let them make
people,
cake, Dario. Like, let them make cake. Don't we feel that's where we are right now?
oh, we're way
It's
past that. We're way past
go ahead.
that.
I'm sorry,
We're
John. Go ahead.
That's okay. Dario, I have to interject here because I think we're way past the Marie Antoinette stage in our economic picture. I think that we're at the point now where we're going to accept, or you will be forced to accept, the 5%, the next 15%, and the rest of you will get what we can share with you. The unfortunate part about that is the entire system is primed on credit, and that's where we're going to go with NVIDIA next, real quick, if you've got time to cover that.
yeah, sure.
Um, because in my opinion, the only methodology that works is to perpetuate the fraud, not just at the government debt level, be it local, state, or federal, but also through the corporate level. And the fraud being perpetuated on real estate is dramatic, where you see commercial mortgage bond securities underwriting properties that are worth $20 million dollars with $170 million notes. You cannot sustain that system without a crash of some sort. Would you not agree?
Oh, I totally agree. But what's happening, in all those situations, and I'm sure Melody knows very well, is that the bank, sit down with the developer and they say, okay, what did I do? Do I put you in default? You get away because a lot of things in commercial real estate also they're not recurse. That's another problem. So the bank will be stuck with a building that no one wants. And do I get the losses on my book? Or I lend you a little bit more money and then use that money to pay the interest to myself, and I can keep pretending that this assets is healthy. And the Federal Reserve of New York, few like late last year, it came out warning about this behavior. So, and then you can do it up to a certain extent, and that's been happening for a long time now, actually since 2022. So you have, as what you said is correct, like it's all based on credit, but also like now is also based on a whole sense, in my opinion, that the system, no one has to take losses into certain part of the system. Okay, everything needs to be onky dory and whatever, but what in reality you're achieving is to have a game where people pass around the risk, and then at some point someone is gonna be stuck with you know with this dynamite stick and very close to explode.
Couldn't
Okay.
agree with this more. Actually, I couldn't agree with him more than what he just said. And
And
but John, go ahead.
I was just going to say, We're going to do a quick commercial break because I need to promote Just Dario. Dario has a fantastic website, gang, justdario.com, as does MacroEdge, macroedge.net/ozone. Get your 2-week free trial. We've got a huge audience joining us tonight. We're going to head into the key aspect of the fraud in the next half hour. If Dario, you good for another half hour?
Yeah, sure. Pretty good.
Okay. I appreciate that because I know your time is valuable, and I do like your perspective from the other side of the world because we don't hear that enough in America. And that's the biggest problem. We're so singularly minded and single-minded that we think that we're the center of the universe when in reality the economy is a global function and we don't pay attention to what's happening. And what you've been covering, and I'm going to give credit to the three people who I follow who have given me more of an education about the NVIDIA, whatever the hell they call this. Nobody Special, Kakashi, and of course, Just Dario have been exposing the underbelly of what is happening with NVIDIA. Now, I'm not going to call NVIDIA a fraud. I will not do that. It's a viable company. It makes a product. It sells the product. What I will say is that their accounting is Enron-esque, for lack of a better phrase, and potentially something that will blow up in the face of investors. Dario, you've been covering OpenAI lately also. So far, there does not seem to be an economic model of viability for AI or OpenAI, especially once DeepSeek introduced what happened in China and is sharing it with the world. Is it not a time bomb for American investors like Cisco in 2000, like Intel in 2000, et cetera, to sit there and accept everything at face value that you're going to use NVIDIA chips for everything when China has spelled out a specific policy of self-reliance and development, which is actually quite competitive to what we're seeing from Jensen Huang?
So yeah, this is an amazing questions and topic. I'm happy to answer. So there is a big problem on what's happening with AI in the US right now, and I believe that the big problem is that everything that is said or claimed about AI, especially in the US, in media and social media, is effectively an echo chamber. Okay, people have been fed a narrative that like never made sense, like never. All the people like working in the sector, building real AI product, and so on, are always laughing about the things that were said. Although no one dared to speak publicly for years. Why? Because eventually that narrative, it helps in their interest. What is their interest? What is your product when you don't have a product? That's the real question. When you don't have a product, the product you are eventually selling to investors in the market is your shares, is your stock. So OpenAI and was not alone. OpenAI has been, and this has been saying it for years, has been an incredibly well fabricated illusion put together by Microsoft and NVIDIA. And OpenAI, what they did, it wasn't like, particularly new. Like Google, they bought like DeepMind and they were like working on AI so advanced for years. They were working on TPUs for years in advance and whatever. You may ask yourself why they didn't release like products, okay? Why they didn't come out with something like commercially viable or whatever. The answer is very simple. Simply because the state of the AI technology in many perspectives, it's still not at a point that you can make commercially viable product. It's not efficient. It's very expensive to train, and to a certain extent, there is not even the demand there. Okay, so you had these people. You had on one side Nvidia that had a problem. The crypto mining bubble just burst, and Nvidia had all these like GPUs to place somewhere in the market. You had Microsoft that with Azure was getting like spanked day in and day out by AWS and Google on the server front, and OpenAI that started as a no-profit company. Let's not forget, it's supposed to be like a no-profit company. Okay, these people figured that they could effectively fabricate a lot of value out of thin air and kill 2 or 3 birds eventually with a stone. One could have resumed selling its GPUs. One could have found another way in order to revitalize its faltering and, to some perspective, frustrating Azure business. And then you had, OpenAI that had everything to gain, from this. And when things started, and when ChatGPT was released in November 2022, like the PR machine behind that was the most incredible like ever. And there were all the like these things began, and people not only started to have FOMO and buy all these GPUs, right? But on the other side, they started to try to buy tech, try to buy other startups and whatever in order to catch up, because this is what the big American companies and investors always do. It's like, oh, what's the fastest way for me to fill the gap? Let's go around and buy what everything that smells like this. Okay, so they started to buy all this stuff, and there is a problem though. What is the problem? Is that you keep investing billions and billions and billions, but where are the revenues? Like, let's not forget that all these companies, any kind of company lives in an economy. When people talk about like trillion of revenues or whatever, it's like, for you to make revenue, someone has to pay you, correct? So who are all going to be your client? Like retail, corporate, whatever. So you're basically saying that a corporate, the whole ecosystem of corporate is going to pay you like hundreds of billions or whatever. But that's not how does it work. Why? That's not how does it work, because all these like corporate clients, they're going to pay you that money if they're going to have meaningful savings somewhere else, or if they take that money from another line of spending and test it out to you. But they will not ever like direct all that money to your business, because they will ultimately impair their own business and squeeze the margins. So what was the problem at hand? There were no revenues, and these people, they started to fabricate them. That's the problem. That's the thing that, being since the very beginning, like also high profile people try to put it out there, and it kind of like, they try to fade it away quickly. But now everyone, Wall Street Journal, the FT, whatever, talks about circular financing. They ask them, oh, is this sustainable? But how does this work and whatever? I'm like, this has been the case all the time. You have $1. This $1 goes around in 3 spots. Because of accounting, you can record $3 of revenues, but there is always $1 going around, and then we'll end up in a pocket. And then you may ask, but how can these people keep growing these things? The answer is very simple. They need to keep attracting dollars into their system, because before they were using their own cash to spin around. Then they started the fear of missing out, the FOMO. Investors come in, investors put equity and capital, so you have dollar getting into the system. Why do you think in all these like startup transactions and whatever, like you always have, you know, Microsoft, Nvidia, let's call it, they're always like part of the deals, whatever. Of course, they're always part of the deals because that's the scheme. The scheme is to sell shares in order to attract this cash, and this cash gets spinned around. And what's the problem is that once they run out of their own cash, once they run out of investors' cash that has spent like billions and billions of dollars, like chasing like this and just completely forgetting how a sustainable business should be structured. Now, as I keep saying for a while, like the only way that this spinning machine can keep going is to raise debt. You need to raise debt. And as a matter of fact, Oracle came out like several weeks ago, boom, $30 billion debt. On Monday is expected to have another $38 billion. But here is the point that is becoming like very, very dangerous. When you raise debt against an unprofitable endeavor, the lenders are not gonna give you debt against that unprofitable endeavor. Like lenders, they reason in a very different way, as we discussed like earlier into this space. One thing that lenders always want, even if it is but will always want, they will at least want to have a sense that their money is gonna get repaid. The money can get repaid in two ways: either if there is a collateral against the money they lend, or if there is a viable business. So what's happening right now is that you have now the companies that, in order to attract more and more cash into this spinning machine, they have to leverage the healthier part of their businesses, because that is where the cash flows come from, and that's where the money to repay this debt is going to come from. It's not going to come from operations that have zero revenues, as a matter of fact. So how is this going to end? I mean, guys, yesterday I was on the phone, you know um it's another guy that from US that calls me, and I told him like a very simple thing. um you know Ask yourself why China is not building all these data centers up there. I mean, if this is supposed to be like a harm race, right? Why on one side of the ocean you have people telling you you're gonna need trillions of dollars in order to make all this infrastructure, and on the other side of the ocean they're saying quite the opposite. So, I mean, I know that from the other side of the world there is,
Can I just say they've already built them? They've already built them. They're all over the country.
you
They're
mean in
empty
China or in US?
in the US. They've
Well,
already built them.
yeah, they build them, but they have plans to build like many more. That's the problem. Like,
No, but let's start with they've already built them and they're empty and there are
oh,
no takers and there's no one buying it up and there's no cars outside of these places. So one thing I did, because I just drove across the United States and I looked at what was happening in our country and I could see it was very Evergrande style. I could see they'd already built all these data centers already. There are no takers. They're empty. There's no cars outside of them. So I just want everyone to understand it's not what we think. Like, it's already been done, it's already been built. We already did this. And the losses are the only thing on the horizon from here. And anyone that doesn't understand that we have so much like data centers that aren't being used, it's it's already all over this country, the United States already. So I'm not clear, honestly, on any sort of narrative that talks about this isn't something we've already done, it's already failed, and we're going to have to deal with the repercussions from here.
Dario, I'm going to throw this in here real quick. I come from an older generation than you, I'm sure, because I'm the oldest fart in the entire room. Pardon my expression.
Not true.
You're young compared to me, trust me, at least in soul. Uh, but the truth is, the creation of what we used to call in my day a vaporware and marketing vaporware, a software program that serves no function but is sold for profit, and then everyone discovers it's useless, is actually where we're at as far as I think with NVIDIA and OpenAI and everything else. You were talking about what's happening in Asia and the lack of data centers. The problem with the data centers, Melody, is by the time we fill those data centers up with the GPUs, no matter what edition NVIDIA has come out with, by the time that data center is functional, and Dario, please fill this in, that data center is extinct. It's already been jumped ahead by
John,
one or two generations.
we don't need them. We don't need them. We don't need them. Like, here's the thing. Like, this is Turk in the machine crap. Okay? I was in AI. I trained LLMs. I understand this. Like, no, guys. Like, we don't need the data centers. We've known that for about 2 years. If you go out on the road and look across the United States, what they're building, what they're not using. Like, no. We are in some kind of mass illusion right now that is so ridiculous. I don't even. And so, what I would say is, I look to Dario to understand Asia because I feel like you, I mean, man, I love it. I love everything. Like, you are so great at this. But in the United States, right now, there's no need for any data centers. Most of them are not being used right now, the ones that are out there, and it's all narrative, and we're about to realize it. Maybe we will realize it, maybe we won't, because maybe we need this to go on for some years. uh but no, no, there's no need for any of this, none of it. And there
So
are data centers that are empty across the United States.
this is actually is correct. So what people like they call about AI bubble, but sometimes I tell them, this is at the end is a semiconductor bubble, because the AI product is not even out there. How many AI listed companies we have? Okay, as a matter of fact, not that many. So this is it has been like a whole narrative engineered effectively to sell a ton of like this GPU that is not needed, because in order to make AI, you have three components, okay? The hardware, the software, and the data. And everyone has been focusing on the hardware, okay? But imagine a car, okay? Like a Ferrari or a sports car or whatever. I, you know, you can build like a beautiful car, but then if you don't have the driver, and if this driver
Correct.
doesn't have the knowledge in order
Correct.
to push it, and then it's not that if you put 10 engines on top of a car, the car is gonna go faster. That's the thing. If people don't get it, it's like, oh no, you need to
It
have a
does.
more and more GPU. I'm like, that's not how does it work?
Can I just say, like, so I started off in technology by teaching myself about technology. I never got trained. I just read a lot of books and learned about network administration, and then I learned about how hardware technologies talks to software. What I can tell you right now is there are like 5 people in the world that understand how hardware talks to software, that in and of itself should tell you we're not on some kind of crazy revolution. I mean, that's not happening. Because if we're about to all become about robots, then you would have a million people that know how hardware talks to software. We have no people. This is so ridiculous what we're going through right now. It's a narrative. It's a ruse. And I have been in technology for most of my life, and I can tell you right now, it's all BS. It's all BS. There's nothing real in any of this. And if it was real, then there would be a million people that could tell me how to make software talk to hardware. And that's how we would get the robot nation. I can tell you I don't even know one person. And I've been in this industry for a long time.
It's pretty
You're right.
scary.
So, yeah, the
It
truth here is that they're basically, the co-founder of OpenAI, like said it out loud last week. These people have all this hyperbolic like thing because they have to do funding. That's the truth at the end of the day. So that's what's going on, and they have been digging themselves down into such a deeper hole. I mean, when you get to $500 billion valuation as a private company, it's completely nonsensical. How can you even IPO that kind of company? Like seriously speaking, like that's the extent of the nonsense that has been reached there. So I mean,
Guys, we're living in Turk in the machine. We are living in Turk in the machine. And if you don't know what that is, Google it. Like, we are living in such non reality right now. It is ridiculous because let me tell you, I am a techie. I love it. I believed in a lot of this stuff stupidly because I could see the promise. I could see what could actually happen if you play the programming out. But what I never met was anyone that actually could do the programming all the way through because it took so much work. And so, Google Turk in the machine. This is where we are. This is the AI bubble. It's ridiculous. And people can go around and they can make up reasons why this is not what's actually true, but it is true. There is no ingenuity here. If we had ingenuity, we would have already cured cancer. But we are living in a medical dark ages. We're living in a technological dark ages. And we're passing it off as if we're we're in something else. It's ridiculous.
Thank you, Melody and Dario. I'm gonna take it from here because I'm gonna make a comment. I'd like to hear your statement on this. Everything I see from Nvidia, from OpenAI, and all these are single or double digit stocks in the end. There's no underlying value to the product they're providing once people realize that they're a commodity and they have an expiration date. Would you agree with that, sir?
well, I totally agree. And frankly, I am shocked that things already got to this extent because at some point in 2022, the end of 2022, there was already an inflection, okay, in 2023. But then like things like started to, you know, go bananas. And already like now the truth cannot be hidden anymore because on one side you had all this promise of all revenues whatever, but there is also another interesting thing like Jensen Wang and other people, they were going around and saying, oh, if you buy like a cluster of GPUs and whatever, it's gonna give you a return of like 100 times the cost you invested. Okay, things like that, completely hyperbolic. And now it comes out like what everyone knew already, everyone that really looks at the rental prices and whatever, that these companies, the one that own the GPUs, because let's not forget, like OpenAI for the most is, and all the other companies, they don't own the GPUs, they rent them. The owners of the GPUs are, the cloud companies for the most of it. Okay. So the owner of GPUs are not making money. Okay. So ultimately, of all these like $1 trillion plus of capex that has been already like spent right now, the most of the part was siphoned outside by Nvidia, that has been that had all the interest to spread all these like GPUs out there. But you cannot make, you cannot release a new GPU every year. As you said at the very beginning, like these things needs to be made, they needs to be delivered, they needs to be installed, and it needs to be run. If you have a new GPU every year, like an iPhone or whatever, at some point, like people are gonna wait for the next, for the next, for the next. But ultimately, you realize that the incremental improvement in order to pay an additional cost is gonna get minimal, and then you revert back to use the A100 or the H100 that do their job pretty well, and you don't need to upgrade, frankly speaking. So what people have been already doing for a while, but they've been hiding it, is that effectively they are working on the optimization. I was almost scared that they pulled the plug on our space because we were starting to spill out too much truth.
Dario, I honestly believe that you spit out too much truth and you scared the hell out of him. I think Jensen Wong has a power switch with Elon. It says click off. Please continue, because I had one more question for you before you were done. It's like, this is ridiculous. Please finish your thought on what NVIDIA's the craziness about what you're saying is so rational. That's what's terrifying. We were talking about vaporware. We were talking about NVIDIA. We were talking about the insanity of what's been going on. Please finish your thoughts, sir.
Yeah, I mean, yeah. Sorry, I laugh because I was like, "What?" They pulled us a plug. But just to finish, what I want to say is that um, people like, going back to the example that I make on the car before, people realize that you know the hardware can be optimized and made it more efficient. So in order to build like a better product or to win a race, if you have a Formula One car and you want to win a race, you cannot like put 10 engines on top of it and think it's gonna go faster, right? So this whole logic that is happening so far, and this thing already like came out. And to conclude what I was saying, the other interesting stuff is on what people are not saying, because people think that they see as a Sam Altman as they almost think he's the founder of OpenAI, whatever. But in reality, OpenAI had 11 founders, and look at what all those people are doing and saying. So they're not like going after like hyperbolic statements of stuff like that and whatnot. Why? Mostly because those people are tech people. While on the other side, you have the more vocal people out there that are effectively salesmen. So their target is to make as much money as possible. They don't give a crap about like making the world a better place, or saving the world, or stuff like that. If there was no money in doing that, they would not be there doing it. Okay, that's just, it's completely like crap. The people that are really after those ideals, like they don't put like making trillions of dollars of revenues as the top priority in order to save the world. What you're doing, you're like choking the world. It is a little bit of the opposite. So long story short, um bear in mind there are three components: hardware, software, and data. AI is not only hardware, is not only GPUs. there are two other pillars, and people should ask themselves a question like, if it is so important to own like millions and millions of GPUs and gigabyte and whatever, why no one else in the rest of the world is doing that? Like literally, okay? Like, are they stupid? I mean, like, are Europeans stupid? Are Asians stupid? Whatever. Yes, they build data center. They bought GPUs and stuff, but you know, not to an insane level. They bought what they needed, and that's it. Because the real product and the real scalability needed the other two components to be in place. So, I mean, how can this be sustainable? Like, you know, I'm very shocked that we got to this point, but these people have been really incredible to convince a lot of people to give them their money to, because they're gonna, like, you know, all these like VC investors and equity investors that invested into this kind of like project that never had made any sense. You know, they collected so many billions out of this, and then they kept sucking like capital into their circular financing machine. That I'm happy like to say more about this, but it can be like become a little bit tedious if we enter into the technicality. So up to you.
Thank you, Dario. And it goes into it. We won't go into further detail because we don't want to abuse our time with you. We really appreciate every moment you spent with us. And your Carvana piece is spot on. A lot of us have been talking about subprime auto. We talked to DiMartino Booth about this also. It all ties together when you perpetuate this cycle of suspect, using a polite term, financial innovation. Eventually it comes home to roost. This goes full circle back to where I want to go for a final question with you and your inside knowledge and your view from the other side of the world. My opinion on the trade war is this is the most absurd thing we've engaged in probably 80 years, maybe 90, I should say. And here we are now on the precipice under the theory before the trade war started that the United States had the upper hand. But as Adam Posen wrote back in April, and I truly believe he had hit a home run with this article, actually China has the upper hand with escalation dominance versus the United States. And as we head into this theoretical 15th so-called meeting between Xi and Trump, which has not been confirmed by Beijing, by the way, at this point in time, is not the United States bluffing with a pair of deuces while the rest of the world is looking at China holding three aces and saying, I wouldn't do that if I were you, because China truly thought long term 20, 30 years ago, went through Trump 1.0, understood how he played the game, and now has turned it on him to the point where there is great risk to our economic structure in the West because of either arrogance or ignorance of how the rest of the world is functioning now. Please offer your opinion on that.
So my opinion on this, my answer on this is that the U.S. administration, with all due respect, is shooting in the wrong direction completely. And why? So what is the problem here? Okay, the problem here is that the factory left the US. That's the truth. Okay, that's the real problem. Things are not made in the US anymore as they were in the past. So all the industrial backbone of the country is not there. But the real question is, why is not there? Like, did China come in the US and steal the factories? No. What happened is that the US company, the European companies as well, okay, had all the interest to relocate their infrastructure and their productions in order to increase their margins and to sell them back cheaply. Sorry, sell them back, like they made them cheap and then they sell them back at higher prices into their home countries. But that creates a very long-term problem, is that people lose jobs and the economy lose like a good part of the real value creating engine. So China, on the other side, has been welcoming this effectively, like they had an incredible, growth. They took a lot of people like out of the, out of poverty and so on. And they simply did what China does very well. They make things at the lowest possible cost for the highest possible quality. And let's not forget one thing, that honestly, you guys in the US, like many times don't get it. In Chinese, the US, the name for the United States is not like America or a country with stars and stripes on the flag or whatever. In Chinese US, the way the Chinese people call US is Meiguo. That means beautiful country. And this is what people think of the US. So when they see this antagonist, they're like, but what did we do? Like we make like, we effectively like work like slaves to make like very good products to you, and now you blame us because we make it for you. Like what's the problem? The problem here, so is not the countries. The problem is the corporates. The corporates, why do you think like Apple, Microsoft, whatever, they raise so many bonds in the United States? Are these people supposed to be sitting on tons of cash? So, okay, let's assume I'm the government. Okay, I allowed you from the US to take the factories abroad. Fine. But the government thinks that the money stays in China. That's not the case. The margins that Western companies made from all this scheme didn't stay in China at all, because they've been using extremely sophisticated structure of transfer pricing in order to maximize their profit, minimize their taxes, and ultimately create a lot of shareholder values. That I'm not against it, but the problem is that in this way you are effectively undermining the very same social structure of your customer base, effectively speaking. So all these companies, they're being, so all this concept that China is still in business and whatever, and they're being like, there is oversupply and they're being unfair and stuff like that. I mean, guys, like I've been living here for a while. Like these people, like love the US. Like it's still like their dream to go there and study there and whatnot. Like all the people like driving like most of the innovation in the US are either like Chinese or from like son and daughter from Chinese families immigrated like there. I mean, like these guys, they're not antagonistic, so they really don't get it what's happening. What's really happening is that the government should blame the corporates, and they did that at some point. They realized it. So you started to see like all these pledges of, oh yeah, we're gonna make things in America again, okay? And then Apple turns around and they are gonna make whatever, like the new, I read like the new batteries or the new components, like in Vietnam with whom with BYD, and I'm like, simply all the whole structure of the U.S. consumer system and corporate system can only work in this way, because you need like very cheap production and selling at expensive prices so they can juice the stocks and everything keeps spinning around. So, but China, like this trade war, is it really against China? Is it really against, like, like in the Cold War, you need like an enemy, you need something, whatever. But in reality, people should look inwards to fix the problem. And if anything, if you have to be honest, like, if anything, Chinese companies have been like blocked from entering new markets, because most of their production has always been like domestic and bought domestically. So now that these people, like, got to a level that, frankly speaking, like, they're making like amazing cars, they're making like another amazing products or whatever, and they're making it so cheap that people in Europe or even in the US, but in Europe is an incredible case. People are like, why do I need to pay like 30,000-40,000 euro for like a Renault car that is basically like bunch of like medals with technology from 20 years ago, where I can pay like half the price for a Chinese EV that it comes like you get what I'm trying to say. So is really the trade war against China? I mean, to be fair, they're really shooting like in the wrong direction, and it should not be a surprise that they didn't sign any deal with any country out there, as a matter of fact. And people don't say these things. The real problem of the company should say, okay, you don't want to produce here because it's too expensive, you produce abroad, fine, you make a lot of profit, okay, you sell your goods here, you got to pay the taxes then. But in reality, the taxes are paid by the consumers, not by the companies. The VAT taxes are paid by the consumers. It's just like a paradox.
I don't think people understand that manufacturing gap, because most people do not understand that a lot of the manufacturing is not by the large corporations, it's by the intermediates. And there are a lot of small Chinese companies and a lot of small American companies, sub 500, sub 1,000 employees, that fill the gaps. Which brings me to the point that I think is important in this discussion. And we'll close the show out with this and let you promote yourself. Please, you have a blank check to come on here anytime. The Prime Minister of Singapore, Lawrence Wong, made a point that it will be almost impossible to fill the transition. It's going to be a very big mess. If anybody read the FT article, I suggest you do immediately. In a post American global order, economically and militarily, we'll leave the military side out. That's sort of turned into a clown show at this point in time. My concerns are that there's a new financial order being set in parallel. And I think you recognized it, you understand that. And the fact that we're not recognizing it to become competitive in that new financial order will cost the American worker and the middle and upper class at some point dearly. To close the show out, please offer your 2 cents. Do you think the Prime Minister of Singapore has a point? The next 5+ years will be so messy that people do not understand what's lying ahead. Whereas in Asia, there seems to be a more stable preparation for it that we don't understand.
Well, actually, I agree. I mean, here, I've been living here for 12 years, okay? And the things that are happening today, they were planned when I arrived. So it's quite incredible. I mean, so this the very, very big problem that there is between Asia in general and the Europe and Western countries and whatever, is that in the West, people are in a constant state of a political campaign. So they need to keep like trying to maximize and to take decisions that maximize the benefits in the short terms. And for the most, they ignore the long-term effects and repercussions, and they cannot plan much ahead of time. So this is not a discussion about like, type of governments, okay? Like if which one is better, which one is worse or whatever. The problem is the mindset. like if you take the right decisions for the long-term benefit of your country, as a matter of fact, in Europe and the US, they vote you out of office because they say, "Oh, you're not making my interest. I'm here today. Why are you making the interest of like future generations or whatever?" So in Asia, like is the mindset of all these countries to prepare in advance, and not just China. Like as you say, like Singapore, like Indonesia, Vietnam, all these countries are coming out. Paradoxically speaking, the countries that are being left more and more behind are the countries with the closest tie with the US, and especially Japan. I mean, Japan is a paradox here in Asia. It's like, as you can see, like they changed government or what 3 times in the past 3 years, and every government has its own plan. And by the time that they try to make something, their approval rate becomes so low that it becomes completely like pointless to try to do whatever they're doing, you know, and ultimately the economy is completely screwed up. So yes, what you said is correct. Like all these like major companies out there, they don't really make things. Like Nvidia doesn't make anything. Apple doesn't make anything. Okay. So all these like companies are just like putting their labels and therapy, whatever, but they don't really make the stuff. And correctly, you have like all this web of small, like small company, medium company, sometimes like rather large company, but not too large suppliers that work with them. And in one side of the world, things are completely all over the place. In one side of on the other side of the world, things are like stable and predictable. And I think one thing that should be taken into consideration by the US is that they were saying, "Oh, we put tariffs because you need us to buy your goods." But it has been proven the complete opposite. Like all these countries, are not people are not in the rice fields anymore. People are, wealthier and wealthier. The cities are growing. They have their own problems, yes, but we're not like 20 years ago anymore, right?
Thank
So
you. Thank you. That is the point I've been trying to make to people in America. Dario, we've abused your time enough, and I appreciate this. We apologize for the drop. We all sent a nasty gram to Elon Musk saying, fix your website, sir. We want to make this the future of talk radio. But if you keep having these glitches, it's going to be impossible. Please promote yourself, and we will wind this show down, sir. And next time, we'll talk about some other companies and some other aspects of the economy we didn't cover this time. Go ahead, sir.
yeah, thanks a lot. It's been really a pleasure to be here. I try my best, to be entertaining, to be insightful without being like too complicated, confusing. That sometimes is my problem when I do my analysis. That you already said you can find on my website justdario.com, but I also like post it here on X, and then I started like also my YouTube channel a while ago, simply because many people were like, I prefer to listen and not to read. So I'm like, okay, what do I do? So I started like to put my article in podcast format on YouTube at the real Just Dario, and every week like I have like a corner where I basically weekly podcast where I basically like spit out like my later thoughts and comments on what happened, trying to maintain a very objective stance, as I always do, for people to have the best possible information to take the best informed decision that they can. And honestly, for me, I do this as a hobby. It's not my full-time job, because it's quite I like it. It's quite nice, and I'm really grateful for you guys for inviting me here, for everyone's support, and I hope that whatever I say, it's if you feel free not to believe me outright, that's actually good, because go check things. Don't take things that people say up front, because they will always filter. There might be biases, there might be like communication gaps or whatever. But I'm happy if I prompt people to go to dig into the facts before taking decision just based on narrative or things that other people might be promoting to them, and in reality it might not ultimately be in their own interest.
Dario, thank you so much. Just Dario. Everyone, a round of applause. Stand up in your chairs at home. Give this man a round of applause. MacroEdge.net/ozone. Get your 2-week free trial. MacroEdge.net/ozone. Get your free trial. Dario, join us next week. Professor Plum, at Professor Plum on X, aka the one and only Michael Green. This is going to be one of the big shows. Also, we're having huge guests every week, like Dario, like Michael, etc. This time, we're going to go full macro with the Fed decision, with the trade war, and everything else that's about to occur. For MacroEdge Radio, this is John Galt speaking. Good night now.